Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for January the 25th, 2011. Now, our first position for tonight is going to be in the futures market, specifically the lean hog contracts, the April futures contracts. Now, what I'm expecting here on these contracts are for it to pull back a little bit. We've got a little bit of a top building here around this 88 level, but we still have a very good strong trend in place. Now what we're looking at is that also that the long-term predicted difference from vantage point is still overbought. Now that will give us some room to let this pull back. Now our predicted MACD and predicted true strength indicator are also overbought, so everything tells me we're going to get a pullback, but this actually will likely be a buying opportunity. Now our key levels here are 84.89, 86.09, and 86.40. Now with a close of 86.25, our key level is the 84.89 area. Now looking at our three main crossovers here, we're going to go in and have a look at the short-term crossover from vantage point. Now the the short-term crossover here we can see is crossed to the downside slightly, but now back up. Now the medium-term crossover is still pointing higher, as is the long-term crossover. So everything here tells me that we're going to get a pullback, as we can clearly identify it's overbought, but at that time the primary trend remains up. So now with that said, we've identified we want to buy on a dip here. We want to go in now for tomorrow and try and find the right level to get into this trade. We have 85.62 as the low and 86.96 as the high. We have the neural index pointing down. Now the neural index again is not a trend reversal indicator. It's simply telling us what the immediate move for the next trading day is going to be. This is telling us it's going to be down. You can see that we had a down day 2 days ago followed by an up day, and now we're forecasting a down day. So 85.62 is the predicted low for tomorrow. Now the other area we want to match that up to is again the 18-day predicted moving average from vantage point. Now looking at this level, we can see that that level comes in at 84.89. So for tomorrow we're going to be looking to get into long positions between that 85.62 and 84.89 area to limit risk. Your less aggressive traders can wait for a pullback closer to the 85 level, but for tomorrow's immediate recommendation, I'm going to say we're going to be watching the 85.30 area very closely and use that level to reset long positions. Now that's our first position for tonight. Now our second position is going to be in the 10-year U.S. Treasury notes, the March contracts or April depending on which one you're on. But what we're looking for here is to sell into any strength. What I believe is going to happen is that these 10-year notes are going to break much lower, and by midweek the U.S. dollar index is going to break higher after the FOMC. So what we want to, again, identify some key levels: 120.13, 120.12, 120.07 with a close of 120.07. This brings this 120.13 level into play. Now what I want to do here is go in and illustrate what's happening on these crossovers. The short-term crossover has crossed to the downside. The medium-term crossover has just crossed to the downside also. Our predicted MACD, predicted true strength indicator are not overbought or oversold. They're actually looking to get into trend-ready levels. So my view is that the 10-year notes, any strength on these 10-year T-notes, we should be looking at selling them. So what we're going to do now is go into the predicted high and predicted low from vantage point and see if we can again narrow this entry point down. We know where that 18-day predicted moving average is. I think it's going to get a little bit above that. We can see that we're predicting an up day tomorrow on the T-notes. That strength for tomorrow, we're going to look to sell into this strength into the 120.16 level, and then we will also like to see a move down towards the 119.29 area. Now this trade is going to be volatile, and this trade will really begin, in my opinion, the shorts will begin to accelerate on this trade come Wednesday. So we're a day early on this. We can see we've had a number of down days. I believe that this was the real trend, but now we're getting into a week where we have the FOMC and a number of major economic announcements. This can change things very rapidly. I believe the dollar will continue to weaken until we get the FOMC statement, and then statistically looking back, the dollar is strengthened right after that. And really there isn't going to be anything in this report, in my respectful opinion, that we don't already know. So this again assists with this trade. Really, it's about finding the correct level of when to get into this trade. Your more aggressive traders can get in tomorrow. Your less aggressive traders can wait till mid to late day tomorrow. But either way, I think we want to start looking at shorting these 10-year notes. So those are the market positions for January the 25th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.